Welcome to ActivTrades News, where we are joined by Neil Kimberley, who's a currency analyst. My first question to you, Neil, is have we seen a peak in the dollar?
No, I don't think we have actually, Zach. I'm kind of slightly out of sync with the market at the moment. The market is, to me, is unwinding positions, the Trump trades, if you will, which were long dollars, because they become unnerved with some of the stuff that they've seen coming out of the States. But my view for the longer term on the dollar is predicated on the fact that looser fiscal policy, Donald Trump, plus tighter monetary policy, will make the dollar scarcer globally, and the world has gotten used to the Federal Reserve pumping in QE in various stages, and the world is addicted to that. So there's going to be less dollars knocking about, the same demand is going to be there, and ultimately I think that means the dollar goes up again significantly higher. But right here, right now, I can see where your question's coming from, because if you've been long the dollars the last few days, or a week or so, it's become uncomfortable ride, and you're having to pick your levels. In fact, I think we alluded to it in the previous one.
Yeah.
Dollar yen down at 112.50, the barriers down there, held last week, low as 57, low in Tokyo yesterday 52, back up to 113.5, almost 114 this morning on Gotoba demand, and then dollar coming down again. So if you're a dollar bull at the moment, you pick your levels but you don't fall in love with the position. If you're a dollar bear, you're selling the rallies and it's working out all right, because you know that underlyingly there's still a structurally long dollar position which is a bit queasy. You're seeing that in euro dollar. You're particularly seeing it, I think, in the upside moving in cable.
Right, I want to talk about cable. Obviously we had the announcement, as expected, I think 8-3 in favour of rejecting the government's appeal. Cable rocketed, but it was rocketing even before that, let's say from, I think the low was 119 something for a few minutes, and then we're up now at 125, 126. Is this a bear market rally, or how would you describe it?
I think it's a bear market rally. I think the market is structurally short sterling, and you can't blame them for that. I noticed last night a couple of the technical guys were saying that the 100-day moving average was coming in around 125.12. The top of the daily Ichimoku cloud was around 125.20. We hadn't closed above the 100-day moving average since before the referendum, and consequently there was a potential up move to 127, 128. I actually take a more cynical view of this, because I look at the forward points as well as the spot level, and I think last week it was a perfect moment for a lot of UK corporates to come in and do some very long-dated hedging. Now, I can't prove it, I wouldn't put names to it, but I suspect there was a lot of natural demand for sterling last week, which was absorbed by the speculative community, but those guys who bought the pounds last week needed them. They're not going to come back and sell them out. So the market was then caught a little bit short sterling at the wrong way, and we saw it moving up into the Supreme's decision, and now again looking better a bit this morning. Could we squeeze up to 127, 128? That's possible. The position needs to be unwound to an extent. Is it going to be in the British government's interest for it to carry on up? No, certainly not. So they'll start talking it down again. So I'd be fading it on the way up, but I'm picking my levels. This is no longer a straightforward buy the dollar market, sell the dollar market. You have got to pick your levels carefully, and you've got to be disciplined with the way you manage your stops.
So the low-hanging fruit of November.
The low-hanging fruit has now fallen onto the ground and it's rotting.
Right, and just to finish off with sterling, I think we've got Theresa May who's going to be visiting Donald Trump, the first big leader to do so. That's also a positive for sterling. So if it was going to be buy the rumour, sell the news, it's not really going to go down until after she's finished that meeting.
There's an upside and there's a downside to this. When you're meeting the US president very, very early in his presidential term, at the moment all of his cabinet appointees have not even been approved by Congress. I read somewhere this morning it's like akin to going to Freshers' Week at university. Nothing's settled down. You don't know who your friends are. Things are going to change. There's power plays all over the place. So it might work, it might not work. If the British government thinks that they're going to leverage that special relationship, I wish them luck with that. Because if I'm the American president and if I'm a businessman, I'm going to do what's in the US interest. Now, if that coalesces what the UK wants in the short term, that's fine. If it doesn't, that's also fine. But I'm going to do what I need to do. And you're seeing that with everything that's coming out of Donald Trump. You know, he's going to build his wall. He's going to put border taxes on people if they build factories outside. He's got the ump with the TPP. He's not keen on this, that and the other. You know, overall, you're asking yourself, well, it's like the whole America first thing, to me, smacks of a higher dollar, whether we like it or not, whether he likes it or not, because he doesn't like the stronger dollar.
But isn't that going to put off, I mean, presumably over the last 10, 20 years, you've had Middle Eastern money, Far Eastern money, hot money, shady money going into the dollar as a safe, effectively a safe haven. So just you're buying, you convert your third world currency into a first world currency. Is he going to be putting off people with the wall and things like that, changes in immigration policy? Is he going to be? Are some people going to say, well, actually, I don't like the dollar anymore. I don't like Donald Trump. Therefore, I don't like the dollar. I'm going to go to the euro. I'm going to go into sterling. Some other markets. Is that a possibility?
If you think about what happened during that whole period that you're talking about, going back to the early 2000s and right through, let's take dollar yuan. Chinese are buying dollars left, right, and centre, and putting it into US treasuries. Dollar yuan's going down, so the dollar is weakening at that point, and they're piling into dollars. Middle East get dollars whether they like it or not. That's the Saudi Arabians have got no choice. That's the 1973 Riyadh agreement. You sell oil in dollars, and we will put you under the US military umbrella. So they get dollars. It's just a question of where they put them. Now you could argue during the whole globalization thing that surplus dollars were put into US treasuries as those economies in Asia grew rapidly and they had more money than they knew what to do with. And also, of course, because it was the US consumer who was buying all the stuff from the Far East. Flip it around, if America is now going to do its own thing, it's going to become more parochial, if you want, isolationist for want of another word. You've already seen from what the American corporations are saying, well, we'll build the plants here. We'll build the factories here because we've got no choice. That means dollars. That means capital going into the United States, greenbacks. That's going to be taken from somebody else. Now, if you're somebody like China, who's had a debt binge for the last 15 years, a dollar-based debt binge, if you're something like the Japanese banks, who have tripled the size of their dollar lending books, you've still got to fund those dollars. And yet the dollars that you would normally get to fund your book are now being used to build car plants in America. And it's like then, at this point in time, the dollar is like any other commodity. The more people want it, the higher the price.
So ignore any weird loose cannon stuff from Trump. It's still the dollar is the main story. It's still strong. Any dips are buying.
In my opinion, yes, but I do have empathy with traders who are trying to trade this day to day, because liquidity is not what it was 10 years ago, and when the market gets one way around, you're seeing these positions being squeezed out rapidly and then coming all the way back in. Again, dollar yen last week, down to 112.50, back up to almost 115, down to 112.50, back up to 114 almost this morning. If you're trading that intraday, that's tricky. It's tricky. You've got to keep your position small enough so you can wear the pain, but you can't relax because you don't know, for example, what Donald Trump's going to tweet next.
On that note, Neil Kimberley, I'm sure we'll find out very soon. Thank you very much.
Thank you.